What's up, guys? Welcome back to the John Hart Stock Option Channel. This is where you're gonna learn trading with option, trading with stock, and also learning all these basic financial what you can do to make money in the stock market. If you're new, my name is John, and welcome to the channel. Don't forget to subscribe and like. And today we're gonna talk about how to make money with technical analysis chart or technical chart. So most people will call it a TA, technical analysis. So for me, I want to kind of show you guys how you guys can make money by learning support, resistance, and Fibonacci. So that's kind of the basic stuff that I use daily to kind of do my research. So I want to show you guys so you guys also can do it yourself and learn the basic TA from me, and hopefully you can make money and doing it yourself. So without further ado, let's go into it. All right, guys. So the first thing that I want to show you guys, the website that I use a lot. I mean, you can also have TradingView, um, Thing of Thing or Swim, or any kind of broker that provide you with a chart. That's what you can use. But I like using this because it's easy for me. So I'm just going to show you the first thing is called stock chart. So this is a free, everybody can use it. You can also purchase the subscription, which is I'm not kind of promote them, but you do have an option if you really want to save the chart that you doing a research. But I can, you can go to pricing right there and then just take a look whatever that you need. So, but for me, let's take a look a couple things. I want to go over XPX. By the way, this video is recorded on August 9. So the market closed this on Sunday. I'm just basically kind of want to pull like 10-15 minutes, show you guys how you guys can learn from this. All right, so the first thing that we take a look is called XPX. This is a S&P cash index. Um, People basically use this to take a look what's going on with S&P 500 or the other ticker that people also use trading a lot, which is SPY. Um, it's another thing that I want to show you guys in here. You basically limit it only to daily and weekly. But in this purpose, I just want to show you guys just the basic TA, right? Technical analysis to learn about basic support, basic resistance, whatever the tools that you can use in order for you to know what is the best entry and also what is the best exit if you using a technical analysis. Of course, nothing is guaranteed 100% accurate, but at least it'll give you roughly, in my experience, about 90% accurate, basically from my experience. So without further ado, let's take a look. Also take a look at the market, the whole market. So the first thing that I want to show you guys is if you click that annotate, right, and then you can make it bigger from here, kind of spin over. So the market, like I say on the last video, market basically kind of sideways. Now we did broke from the sideways mode and we are kind of filling up the gap now. This is, I know you guys cannot see it here, but this is the sideways I mentioned about last week. And now we basically broke to the upside. Let me see if I can get the correct. Anyway, so yeah, so this is basically what we're looking at right there. So we are kind of in the gap fill zone. So there is another gap fill here around 34, 33.90, 33.80. That's kind of the target for this coming week. So that's what something that we want to take a look. And then also another high level, if we go to the higher, that would be around 34.30. That was the last high before we even have a big pullback, basically with the COVID-19. So looking at this, right, if you learn this, you're gonna learn that support, which is the bottom part here, right? You can see the tail, resistant, resistant. What does resistant mean? It's like there's multiple same level where the market was below, right? Now it's trying, it basically first try pullback, right? And then after that, another try, second try, bam, and it pull back again. So that resistance holding until that it's broken. Let me see if I can draw another one. And then until it's broken right there, and it just keep flirting with the resistance. And then once that break, market just took off, right? So it's pretty interesting. And then after that, what happened? We're going back again and test the support. So once this resistance basically break, it become a support. Some people, if it's been testing it so many times, that can be also become a minor support, right? Let's say if it's one or two, you know, times basically tested, then it's a minor support. If it's been tested many times, many days, many weeks, right? We're looking at some of the period, then it become the major support. That's kind of the term that a lot of traders use. Um, I'm going to show you also on the weekly. So, but look at that. It tests spotless, basically. It just like really to the penny where the major, well, in this case, it's going to be a minor support. And then what happened? Test it, and then it bounced, right? And then what? If you look again, then it going down again, but it never really making the same high or same low. So making a low high. So if it's a low high, tendency basically has a bounce basically from there, and you can see it just basically going sideways, grinding higher, and then just keep sideways, and then you just keep going higher. Now you guys can get the idea. Now we have the support right here. I can also write down here, call it, there you go, resistance slash support, right? I can take a note there so you know that's, hey, that's a resistance, that's a support. Now, if you're also looking at this sideway, just kind of, I get the idea. And then if you also can draw this, I mean, this is called a research, right? This is where you can see like, oh, okay, now I see that where there's resistance, there's a support. And then what happened? Resistance, support, middle, right? In the mid, and then resistance again. And then what happened? It just sideways break, pull back a little bit, and then break out again. So resistance, support, and then it broke, resistance. And technically this is supposed to be a, right here, a support because it break. However, if you look at carefully, let me delete this so it doesn't really go crazy. The idea also, one of the rule that I like to kind of mention, every time you have a breakout on the first day, the following day need to confirm. What does that mean? Breakout the next day, it needs to make sure it close above that breakout day, right? Or within the breakout day. If it doesn't break out and do the follow up, then there's a question mark. You just have to be careful because sometimes there's a false breakout. It break out and then it go back down again. So when it go back down, you got to be careful because the the pullback could be large. Like for example, if we look at here, this is a false breakout, then it will go to this low again, which is the 29.80, 29.70, right? That's kind of the idea. So remember, a breakout, it has to have a follow-up. And the same thing with the support, right? When the market basically tank and then it start testing that support and then break the support, you need to make sure it has a follow through, because otherwise it can just go back again to bounce again and then go back to whatever the low, the test low, and then it bounced back and it testing the resistance again. So there's multiple way you can play this. Okay, this is for people that is interested to learn technical analysis. You're in, you're out, you know where the better place to buy, you know where the better place to exit. Now, if you are a long-term investor, this is what you can learn to enter at the best price. It doesn't mean the best price for all stocks, but at least you know where the support, and if it go down again below the support, let's say you break that and then you go down to this area, right? Pretending that's the support. Then you can also buy another one and do an average call a average dollar cost. So which is lower down your costs, right? That's kind of the idea that I want to share with you. It's pretty simple. It's not really kind of rocket science. You just have to put an effort, and you um, start basically drawing by using this free website, right? The other thing I want to show you now, this is a daily, right? There's also another way how you can also drew the support. Earlier, like 5-10 minutes ago, we learned about support horizontal and resistant horizontal. Now we can also learn about trend line. You can draw it diagonally, right? That which is also consider, hey, look at that. If it pull back here, which is never got into that, this is also considered as a support. Now, in this case, look at that. There's also a moving average on this location, right? In this location, which is what? The um, 50 moving average, right? A lot of hedge fund, they look at two things: moving average between 200 moving average, which is the red line here, right? They always tend to get bullish if it's above 200 moving average, and they tend um, put more money if it's on above both moving average. And then this is also considered as a golden cross. If the blue line, which is the moving average, start crossing down, okay, then people tend to be bearish. If it's going up, that tend people to be bullish, okay? That's something that you need to look. You don't have to look every day because it's not accurate, okay? I'm saying this because the moving average always delay. The way it's delay, it's pretty delay. That's what I'm trying to say. You can see the market pull back big and then pull back again, but the moving average never cross yet until it start bouncing. You see that? It start crossing in this level, which is considering is really delayed, but you can see if it start going, kind of make a turn down, that's where you can start thinking there's going to be a pullback, right? Okay, so we talk about that, and now we also talk about this trend line. And the same thing with the trend line. You can also draw the trend line when the market really pulling back. You just have to know, hey, if the bear need to hold this market basically bearish, that means this day it cannot breach this level. If it breach, what happened? It's basically just keep going higher, right? Now, if the market basically same thing with this, if the bears need to keep the market basically bearish, then technically this day it cannot break this level, right? The same low as this guy. I hope you guys understand this, right? This is where the support, look at that. Now, technically, it did not break that, and it did not even touch that low, and it just market took off, right? So that's kind of the idea I want to show you guys. Now, if we look at the weekly, okay, always remember, look at daily, weekly, and monthly, so you can know where the market trend remain, right? If the market remain bullish, which is, over the period of time, it's still going up higher, then the trend is still bullish. Always follow the trend. Never blindly just going into the stock and um, trade basically against that, because you're gonna get hurt, big hurt. That's what I'm trying to say. All right. So another thing that I want to show you guys, this is also another thing. This is on a weekly. If you look at this, right, we pull back in March and then we bounce all the way, which is amazing. And then here we start pulling back. Now, what happened if you look at this? This is the same. The bears need to maintain this trend line if they want to keep in control. However, they couldn't. The buyer just keep piling up and we broke that. Now, look at that. The first break, this is the first week, right? Pull back and then bounce again. And then the second week, up and then pull back. And then after that, the third week, the fourth week. So this is within weekly bar, okay? And the same thing with bulls. If the market want to keep the bulls running, they couldn't, they're not supposed to be break this level, okay? Now, I know this looks crazy with the tail and everything, but if you look at this and then you just draw it that way, okay, that 3290, which is the level I mentioned on the last week, that's something also that you want to pay attention, because that is the kind of weekly trend line. You can also change this not only daily, you can also change it to hourly chart, right? 4 hour. I like to use 5 minutes, 15, and then I look at 1 hour and then 4 hours. Okay. And then you look at daily. Now, daily basically for the swing trade, weekly for a longer trade. It could be a swing trade, or it could be also a long-term investor. Look at that way. Now, 5 minutes, 15 minutes, that's what mostly people day trade use, just to see the movement and then do the trade in and out that way. Okay. 1 hour also use, 4 hour mostly just on the swing trade, just to maintain the momentum. Okay, so I guess that's pretty much it. I mean, this is what the level was broken on the last support. We basically went down. Remember, I mentioned to you, when it break down, and then you need to maintain, hey, there's a follow through. It does have a follow through. However, within that week, it just bounced up again. So it never really closed below that previous week. Okay, if you look at on the weekly. Now on the daily also, you have to look at that way. Okay, now if it break, then you know where to go. Now the market has been it's gonna test this level. We are in the gap zone right now, if you see it. Okay, well, I guess that's where we are. It's already filled. The gap is already filled. We're basically going up again. So technically we're gonna try to test that 30 something, whatever the highest. So that's pretty much I have. I mean, it's it's pretty amazing if you can understand the technical analysis, and then you can see how much money that you can make just based on trading, understanding the trading between resistance, between support, resistance, right? And then there's also support here, right? And then this is the trend line. What happened when the trend line break, and then you just keep going down, okay? And then you can see that the trend line is just keep grinding, keep going up, and then break, bearish, completely bearish, and then just keep sideways down. And then now it bounced. Remember that 200 moving average I mentioned? This is where the hedge fund looking at that buy point entry, they have the biggest money, right? Everybody just keep piling up when they see that bounce, and then after that pull back, test the support, bounce again, and then there's a fake here, right? Basically it does have to follow through, and it broke down again. And then what happened? It just basically all the way to the midpoint, and then it bounced on the range, and then it just keep higher again. Now, if you look at this, you can also draw this trend line. What happened? We do have the trend line there, and the trend line basically broken, go up again, and then it start looking at bullish, and then it break again. Now when it break, it's going going crazy down. So that's kind of the idea, how you look at the market. Play day by day. Never get emotional with your position. If it's wrong, it's wrong. You just have to have a two option. Either you hedge it or you get out, right? Also, if you hedge it, then you need to know, you need to make sure that you do taking a risk, right? You're expecting the market will pull back again to whatever the level that you are get into or long into, whatever that position you're in. That's pretty much I have, and I hope this 20 minutes kind of basic tutorial for you guys to learn and make money from the technical analysis. So without any other stuff, we probably will continue with another video next week, and we're gonna learn something else new. Anyway, don't forget to share with your friends. Click and smash the like buttons. The algo like the smash button. Smash the like buttons, and also hit the subscribe. Anyway, guys, thanks for watching, and hope you guys have a great weekend.